It's quite a surprise to find that you'd see the job losses in the gold sector. I think most people were expecting it to be the other sectors. I must admit I'm also fairly surprised, but I guess they're also struggling, they also have the issues, and where there's high-cost operations or shafts, they have to close down or retrench some of the people.
That said, that we have seen gold shares run particularly hard, particularly the international sector. How do we stack up locally in terms of that?
Well, I think if you look at those local gold shares compared to their own history, they're fairly cheap. I mean, we're expecting this year and the following couple of years for them to make a profit for a change. So, I mean, if you just look at the big three of the big three, they're probably trading at a forward P of between 10 and 20. If you compare them to their peers overseas, then if you look at the price to book valuations, then they are very cheap compared to them. But if you look at forward Ps, it's very similar. There's some discount in the local shares, but it's not as big as a price to book valuation. And also just keep in mind our local shares are higher cost producers to the overseas shares. And I think in current market environments, there will probably be a rush to gold shares and gold. And I think foreign investors will try and push up the South African players to be in line with valuations of overseas companies.
That's it. At a production level, we have taken a bit of strain. We're the third biggest producer now. Clearly, we had some problems over 2008. Are those likely to continue, do you think?
I think the gold companies have shown that they always struggle to get gold out of the mines. I mean, they're mining deeper and deeper, and expectations are always kind of met, but there's always a disappointment or two. I think we've seen fourth quarter production falling yet again. Keep in mind that gold production is fairly seasonal, and the fourth quarter is normally fairly much lower than the previous quarters due to the Christmas break.
What are we likely to expect from the results coming out of these miners now?
I think you'll have to look through the results that they're going to present in February. Most of them, AngloGold will probably show a loss that's due to the hedge book. Harmony won't be. Harmony's quarter will probably look good. Same with Goldfields, although Goldfields had some problems at Kloof. But I think investors will try and look forward, and I think if you look at the forward earnings, all of them will probably show a profit. As I said earlier, forward Ps are between 10 and 20.
I suppose the question now is, do you buy gold in terms of an ETF like New Gold, for example, or do you look at the shares in this sort of environment?
Look, it's very difficult at the moment to call gold shares. I mean, the gold ETF, since it's been launched, has given you a 40% return annually. In any investment, if you've had 4 or 5 or 6 years of 40% returns, I would start to become a little bit concerned. I know gold is the theme of on everyone's minds at the moment. Everyone wants to buy gold shares, but I think if you haven't invested 2 or 3 years ago, you've actually missed out. And I'd rather try and buy other resource shares that's actually bottoming out, rather than try and catch the gold shares at the moment.
What about then something like Merafe, for example, which is seriously under pressure because of the ferrochrome price? Is that the sort of resource you're looking at then?
Well, Merafe is extremely cheap at the moment if you look at historic earnings. The big question in everyone's mind is what's going to happen to future earnings. We've seen they've just settled the quarterly contracts at 80 cents a pound for ferrochrome, which is probably going to put their earnings this year at, I would say, naught, maybe 2 cents, maybe minus 2 cents, but in a region of naught. So it's very difficult to value that company. If you look forward and you believe China's going to recover, you believe the world's going to recover, you believe the demand for stainless steel is going to pick up, then Merafe is extremely cheap. And if you buy it now and you're willing to wait for 3 years, then you may get very, very healthy returns, but you may actually be disappointed 6 to 12 months from now.
Cor Booysen is the resources analyst at RMB Asset Management.